Hey, I thought this video was really important. I want to do a quick little intro. This one was pretty interesting because it's for anybody that currently owns a house that wants to do a renovation loan. It's a little bit different than a HELOC. Dave kind of goes into the nuances of it, but typically a HELOC limits you on the value of it's based on the current value of your home, whereas this one is different because you can get a renovation loan up to the value of what your house is going to be worth. Listen to Dave and I kind of talk about the finer points about this one. Certainly an option if you currently own a home, don't want to do a cash out refi where your interest rates go up, or you just don't have enough equity in your home to do the renovation. So consider this. I'd like to, Dave was calling it, I guess the term that we're using is a renovation home equity loan. Appreciate you guys watching. Make sure you subscribe. Thanks. Hey guys, it's Peter Cunha, broker owner of Open Doors Realty in beautiful New Jersey. I do consider myself the New Jersey real estate giant. I'm here with my good friend for a weekly update, David Baum. How you doing, buddy?
Hello, Peter. Hello, everybody. How you doing?
How's Cross Country Mortgage? Before we even get started, Dave, I'm going to give you the whole floor today. It's Valentine's Day. I'm in my pink hoodie. Open Doors Realty. Really excited about these things. But you have given me some great information that is a little bit of love to me and my clients of some product that's coming out that I've never heard of before. It's a renovation home equity loan that is better than a HELOC, is kind of what I'm hearing.
Well, it's
Yep.
just yeah, let's talk. So obviously, right now, obviously, for anyone that has purchased a home in the past couple years, or has refinanced and loves their interest rate below 3%, right? And they don't want to leave or don't want to move into another property. And a lot of times, maybe they have reached the maximum capacity of their current home. They want to do the renovations, right? They want to do an addition. They want to do certain things. Just like when you buy a house, there's a renovation loan, right? Now, we actually have a second mortgage product that we can help out for renovation. It could be a loan or a line of credit, and pretty much they'll allow it to use after market value of after renovation versus a traditional home equity line of credit where they'll only go up to 80, 85, or 90% of your current value. This is going to go off the aftermarket valuation, and they'll allow to go up to 90% of that aftermarket, combined loan to value of your first mortgage and that new second mortgage. Maximum of $500,000 available, minimum of $25,000. This is available in New Jersey. It's available in most states, not every state. There are some exceptions. It could be, like I said, a home equity line of credit or a loan, so it can be fixed, a second lien position only. Minimum FICO credit score of 680. Okay. And then so that maximum combined loan to value is 125% of the during renovation and 90% of the post renovation. 25,000 to 500,000 loan amounts. This can be for a primary and a second home. Cannot be for an investment property. Okay.
So if I'm getting this right, you're getting into all the technical stuff. And what I love about this is what you're telling me is, all right, I bought a house 2 years ago. Again, everybody was buying the house, not necessarily the house that was their dream house. They were just buying a house. They're locked in at 3% interest rates. Now they want to put an addition on the house, and they want to renovate their kitchen, bathrooms, add whatever it is.
Correct.
This kind of doesn't affect their current mortgage, lets them kind of stay where they're at. Is that kind of where we're going with this?
Yes. So, and exactly where people could do a cash out refinance. They could pay off that mortgage, right? Like a lot of lenders, most people, we give options, right? Are you going to do a rate and term refinance? Or are you going to do a cash out refinance? Or are you not going to touch that first mortgage and you're just going to do this type of either a home equity loan or a line of credit or a renovation loan or something of
Right.
that nature, right? So it gives people options. You can do all options, whatever works best for clients. Cash out refinance, maybe it's better for somebody if maybe their rate was not already super low. But if it's low and they want to stay there, they probably want to keep that lower rate. So this is an alternative product, right? Than
So,
just a cash out refinance.
okay,
So yeah, so it can be done. It's got to be obviously for the renovation itself, right? It's not, you're not doing this loan to just pay off some, normal debt and not use it for renovation. This is solely for renovation. If somebody took out personal unsecured debt, right,
right.
to do some of the renovation projects, if you
Pay
can
off.
prove that it was used for that, we can possibly get that utilized and paid for as well. But we got to have proof that it was used for the renovation towards the house, not just racking up credit card debt or something of that nature. But as long as we have proof to validate it and it can be approved that it's validated, then that can be utilized to be paid off.
Okay, and last thing, so we were talking about this a little bit, and this is where it got me excited. So HELOCs are pretty much the same thing. They're unsecured. You can use them for renovation loans. A lot of people get HELOCs, right? So the major advantage, if I heard this correctly, and you kind of go into a little bit more detail, is that this loan is based on the aftermarket value of the house, not the current value of the house.
Right. So it's both actually. So the current value is going to be better than when they bought the house, right? It says you could do 125% of the during the renovation part and a max of 90% on the aftermarket. So let's just say if it's, the house is worth $750,000 currently, right? It says if you can go up to 125% of current renovation and 90% on the back end, right? So that whatever is from a max. So 12750 plus 1.25%, 750 times 1.25 is like 937.5. We're not going that high, right? Because if the aftermarket value, it maybe not that. If it's the aftermarket value of, let's just say, if you're buying a house for, if you own 750 and after renovation is only worth 900, that 900 and 935, it's pretty close, right? But the back max is 90% on that aftermarket value with the max. So it's 125 max current or 90% on the back end, max combined loan to value. So it's going to be higher than a current home equity line of credit. A current home equity line of credit, you're going to be maxed at around 80, 85, or 90% of your current value. They won't go any higher, right? So this is allowing those numbers to increase than that 80, 85, or 90% right out the gate, along with looking at the aftermarket value, because some aftermarket value may increase from 750 to 1.2 million based on what they're doing, right? It's all relative on how much money you're trying to look to do and what type of projects you're looking to do and how much that home is going to appreciate. And it also determines on what your current balance is on your mortgage, right? Because there's so many different factors, based on how much you could do. But there's a max of $500,000 allowed. So if the house is worth 750 and you only owe 300, you're in pretty good shape, right? You've got plenty of money available to you. If your house is worth 750 and you owe 600, there may be, there's still going to be a tremendous amount of work done, but you may not have as much available based on that. It's going to determine what your current value, what your current balance of that mortgage is. That's going to also mainly determine how much extra you're able to utilize.
Right. And I think that the other thing that I really kind of appreciate about this process is that they get to work with you directly, right? You do kind of, I don't want to call it the underwriting, but they can only get this sort of loan through you. So
Yeah,
you're
a lender has to recommend a client for this. It's a really special product that certain lenders work with and are approved to do, and we are approved to do this type of renovation loan. So yeah, we basically will have counseling, obviously reach out to borrower immediately once they work on an application and get the ball rolling with.
right. No, that's awesome. It's super excited. It's always great to hear because I can't tell you how many people are kind of, nobody, what's the number one thing? People aren't moving
Uh-huh.
because they're tied into their mortgage rate, right? They don't want to go from 3 to say 6. And part of it is like, okay, if you could do some renovations to your house, and I fall into that category, right? I bought my house
Yeah.
about 4 years ago, didn't love my house, loved my location, and then we renovated major parts of the house, and I love my house now. Like I'm not going anywhere anytime soon.
Right. You're in that boat. Me, I bought my house in 2013, same thing. And we've already done work to the house and we're comfortable with where our taxes are and our interest rates are. And we don't want our taxes to go up by, finding that next house. So they'll still go up after a renovation, but obviously you're just making your current home, obviously what more you're going to want, obviously, to stay with and stick out. And some people are doing that, and some people are trying to find that other house that's just not out there right now, unfortunately.
All right.
So yeah, just adding another product out there. Obviously we can still do the whole line of credit options, but this might be a good opportunity for people that are solely looking to do renovation and potentially looking for more than what current value is and at a lower combined loan to value. So this is giving an option to allow for more money by utilizing the aftermarket value, right, during that renovation process, and have it specifically for this.
Right. Right.
All
That's
right.
Yeah. So, Dave, how do people start the process? How do they get in touch with you?
Just reach out and I can basically send them a link to get started on this. Best number to reach me, 732-853-4969. Or you can hit me up, David.Baum, that's Baum, at ccm.com.
Awesome, man. You're doing a great job. I love how, the markets are changing real quickly and you guys are offering products that, it's not just buying and selling houses, it's, helping people with their current situations.
Yeah, that's what we do. I mean, we help people out. Remember, not just purchases, refinances, cash out refinances, these types of, obviously home equity line of credits, non-QM products, jumbo products, VA loans, FHA, USDA, you name it, we can help.
Right. And I appreciate you. And that's what I love is that you're the first phone call that I make. And where do I go from here? So Dave, thank you for making
Got
me
your back.
good as always.
All right. Have a great day, everybody.
Happy
Thanks.
Valentine's Day, buddy. Bye.
Happy Valentine's Day, everyone. Bye.